We have Chris Jarvis on the line to tell us what's happening at the pump. Chris, I filled up this morning. I filled up my big beast Escalade again. I drive a lot, by the way. And I think I was under that. $60 again. This is really good news for me as a consumer. How's it doing for you?
Well, hey, I have that the same luxury, filling up the car. I don't have the big Escalade, but certainly it's nice to, take a little bit of a, $30 discount from what I was paying prior. I'll take it.
Can you talk a little bit about the strengthening dollar and what impact that has on gasoline prices and in the oil marketplaces for individuals that are invested in oil wells or thinking about investing in oil, that sort of thing? Because the dollar strengthening has had a pretty big impact, has it not?
Well, absolutely. Aside from the supply and demand issues that the market's facing today, the next big caveat or the next component of this whole story is the dollar. And a strong dollar is usually very bearish for commodities, and specifically oil. Globally, oil is priced in dollars. So when the dollar appreciates, it makes the price of barrel here in the United States cheaper, and overseas it makes it more expensive. So it's so for the globe, or China, India, Europe, and just the rest of the world, although prices are going down, it's somewhat being offset because the dollar strengthened so much.
Yeah, so on that note, when we think about the stronger dollar, what impact is that going to have, say, on exports, big multinational companies doing business in China and in Europe and all over the world, per se, McDonald's and so forth? Is it hurting those companies as well?
Well, absolutely. I think any companies that have a big, I would say, revenue base outside the United States, the strengthening dollar, when they convert it, it's going to be less revenue because of the appreciation of the dollar. So certainly companies that have a large exposure to non-U.S. business is certainly going to be impacted.
Yeah, so that being said, I'm surprised that every administration for as long as I can remember has always said we stand firmly behind having a respectable dollar and a firm dollar price. Yet in reality, it would seem that a weaker dollar is actually good for business. Can you explain that dichotomy?
Yeah, well, in the past, now you're talking back in the 80s when we had, 12, 14% interest rates. We had screaming inflation, relatively speaking. Everybody wants a strong dollar in that environment because that's the only way you can kind of keep that in check. But on the flip side, today, 2015, most of the mature economies in the world, and certainly the United States, are really facing deflationary pressures. So in a deflationary environment, you certainly want your currency to weaken because a weak currency is actually inflationary. So you're starting to see this currency war where everybody's trying to deflate their currency against each other to try to avoid this spiral of deflation.
And we're winning that war because we are the prettiest girl at the dance. Chris Jarvis from Pipeline Oil and Gas, I know you've got a white paper on tax benefits, the tax benefits associated with investing in oil and gas, and you also have a white paper, what every investor needs to know about an investment in oil and gas. So folks, here's what I want you to do. Go to pipelineoilandgas.com and get the paper from Chris Jarvis and Brandon Cox from Pipeline Oil and Gas. Chris, thank you very much for the extended segment.